posted better than expected results in the June 22 quarter led by strong consumer demand. It's witnessing robust demand for its products across fashion concepts. Even the performance of the stores opened in the last 1 year has been encouraging, prompting the company to go in for a rapid store expansion. Trent has one of the best metrics in the apparel industry owing to a 100% private label offerings, lower discounting and a huge loyal and a growing customer base, resulting in repeat purchases. Over the last 4 years, Trent witnessed about 30% increase in the bill size from consumers, highlighting good and varied product offerings as well as a strong brand pull. The launch of the super app by the promoter Tata Group can significantly enhance the consumer base for Trent, helping the company rapidly scale up the business. Trent, in fact, is our preferred pick in the retail space, a quality stock to be owned in the portfolio. And remember, since our recommendation in the retail sector note 3 months ago, the stock has gained 29%, outpacing Nifty's 14% up move. We remain positive and advise investors to add the stock in the portfolio if you haven't already. Trent's revenue surged 40% on a QoQ basis in Q1 FY23, led by strong consumer sentiment following the end of COVID-19 restrictions. The flagship brand Westside, which contributes more than 70% of the revenue, witnessed a 24% like-for-like growth in Q1 compared to pre-COVID quarter of Q1 FY20. It maintained gross margins on a sequential basis. However, EBITDA margins improved strongly by 550 basis points to 18.4% in Q1 FY23. Operating leverage owing to strong top-line growth led to margin improvement. Trent realized a one-off depreciation charge owing to revision in estimated life of certain store assets. Net profit grew 37% QoQ, broadly in line with the revenue growth. COVID-19 led to restrictions on people's movements, significantly affecting the revenue of apparel players like Trent. However, with the end of these restrictions and normal operating conditions, people's movement resumed significantly, leading to a pickup in apparel sales, benefiting players like Trent. Apart from the main apparel segment, Trent is also seeing a pickup in emerging segments like beauty and personal care, innerwear as well as footwear. Now, these emerging categories right now contribute in the excess of 15% to the standalone revenue. Post the disruptions over past 2 years, Trent accelerated store openings last fiscal. It added 126 stores in FY22, which is much higher than 117 store openings over FY20 and FY21 combined. Trent reached a store count of 433 as of FY22. Store openings have been strong across formats, which is flagship premium offering of Westlife as well as the value fashion segment Zudio. It has taken the lead in network expansion and is entering newer cities and opened 100 new stores last fiscal, reaching an overall store count of 233 as of March this year. Westlife opened 26 new stores, reaching a milestone of 200 stores as of March 22. Trent stated that it's in the initial stages of growth and we expect the rapid store expansion to continue. The trend of increased online shopping witnessed in times of COVID has sustained. Trent saw increased online traction even as the offline physical store sales have rebounded. Its online revenue made for about 6% of the flagship Westlife brand sales. Apart from the ramp-up in brand website and group's online platform Tata Click, Trent is also tapping the group's new super app Tata New, which combines a host of offerings from the Tata Group companies. Trent believes Tata New can significantly attract new customer base to the Trent stable. Weststyle, which is the annual subscription program, continues to see strong traction with 37% QoQ increase in recruitments and renewals in the quarter gone by. The company is also seeing increased loyal consumer base, with the Weststyle Club members increasing to about 8 million. The bill size of the members has also increased by about 30% over the past 4 years. Now, if we look at the valuation, our SOTP for Trent indicates an upside of about 25% from the current levels. We remain positive on the stock and it continues to be one of our preferred picks in the retail space.